Tokyo, like a thick fog gradually lifting to reveal the peaks of an ancient mountain range, the outlines of Japan's economic potential are finally emerging after decades obscured by the sub-zero rates and unorthodox policies that seemed permanent fixtures of the financial landscape. With its decisive actions this week, the Bank of Japan has cracked open the window, letting in fresh winds of change. For years, those of us observing this nation have grown accustomed to an anomalous state of affairs, an economy wheezing under the weight of deflation, consuming life forces like an ailing patient on a medieval cure regimen of leeches and bleeding. The prescriptions from on high at the bank became ever more unconventional: negative interest rates, capping bond yields, hoarding stock funds and real estate trusts. Desperate remedies for desperate times. But as another famed Japanese export, the writer Haruki Murakami, reminds us, no matter how far you travel, you can never get away from yourself. And so it is for this proud nation. The relentless forces of its cultural DNA, diligence, craftsmanship, corporate loyalty, could only be suppressed for so long beneath the fog. The tectonic shift underway now traces back over a decade to Abenomics, the three-pronged offensive waged by former Prime Minister Shinzo Abe to resuscitate Japan through monetary ease, fiscal stimulus, and structural reforms. While ample ink has been spilled analyzing the mixed legacy of that program, we can see in hindsight that it acted as a defibrillator, jolting the economic vital signs, which are now reviving to healthy levels. For this, we can credit not just policy, but the Japanese people themselves, the salaryman who persisted through decades of stagnation, continuing to hone skills and transfer knowledge across generations. The industrialists and exporters who rode out rough seas, always refining their products, with disciplined meticulousness. The recruiters and managers reconfiguring workplaces to accommodate more women, seniors, immigrants, squeezing maximal value from a dwindling workforce. Slowly, almost imperceptibly, these manifold strivings tightened the labor market. Companies found themselves forced to boost wages to attract and retain talent, unlocking pent-up spending power for consumers long conditioned to thrift. As this virtuous cycle has gathered momentum in recent years, prices have begun edging firmly upward, alleviating the deflationary psychology that gripped Japan since the 1990s. Which brings us to this week's watershed from the central bank. In a single deft maneuver, Governor Kazuo Ueda acknowledged and cemented this transition, casting aside the extraordinary tools that became outdated shackles on an economy straining to operate under its own power again. The end of negative rates and bond yield caps tees up domestic yields as a viable investment alternative for Japanese savers, unleashing funds that had been bottled up with limited outlets under the old policy regime. Make no mistake, this liquidity surge will ripple across global capital markets as Japanese institutions rebalance their portfolios. Emerging markets' currencies could strengthen against the yen, commodities prices may rise, sovereign debt markets could reprice as yield-starved Japanese investors hunt for returns overseas, but the impacts most resonant and lasting will be internal. By allowing interest rates to rise organically in response to economic conditions, the guardrails have been removed, enabling the economy to find its appropriate equilibrium level. This delicate rebalancing act will test policymakers' mettle as they try to keep growth on an even keel. Yet the reward is an economic environment finally operating under normal conditions, free from the distortions and moral hazards of artificial stimulus that persisted for far too long. As our eyes adjust to the landscape revealed by this pivotal clearing of the monetary air, what emerges is the striking possibility that an economic renaissance in Japan has been visible on the horizon all along, just waiting for the vapors to part. The economic and industrial base powering this nation has been present, if masked by decades of abnormality. Returning to fundamentals may unlock dynamics that restore Japan's global centrality as an exporter of precision goods, a capital source fertilizing growth worldwide, and a cultural trendsetter attuned to demographic realities before other advanced nations. In describing his process, the iconic Japanese novelist Murakami said, "I go back and forth between awareness and unconsciousness." So too has Japan's economy cycled, alternating between inspired periods of hyperconsciousness of its potential and inexplicable lapses of impaired economic vision. With clear sight now restored, the open question is whether this island nation has the fortitude and adaptability to reimagine itself for the future as deftly as it has steered a course through its uncertain past.